Welcome to Zeitgeist. I'm Zuri, that's Alistair, and today we're talking about something that's been bugging everyone.
Inflation, or more specifically, why everything still feels so expensive when we keep hearing it's getting better.
So here's the headline. Inflation is at 2.7%. That's down from the crazy highs we saw a couple years ago. Core inflation, which strips out food and energy, is at 2.6%. Economists are calling this progress.
Okay, but if inflation is down, why did I just pay $6 for a dozen eggs?
And that's exactly the disconnect, because here's what those headlines don't tell you. Inflation going down doesn't mean prices go down. It means prices are rising slower than before.
Wait, so prices are still going up?
Every month. 2.7% inflation means prices are still climbing, just not as fast as they were in 2022 when it hit 9%. But here's the thing people forget. Those price increases from 2020, 2021, 2022, they stacked. They compounded. Prices went up over 20% in just a few years, and they never came back down.
So we're not recovering from inflation. We're just living with higher prices now.
Exactly. The old prices are gone. This is the new baseline, and when the Fed says they want to get inflation to 2%, they don't mean they're going to undo the damage. They just mean they want prices to rise at a slower, more predictable rate going forward.
That's kind of depressing.
It is. And it gets worse when you look at what's actually driving the numbers, because 2.7% is an average. Some things are going up way faster.
Like what?
Food. Food prices are up 3.1% year over year. That's higher than overall inflation. And if you eat out, restaurants are expected to raise prices another 4.6% this year. So every time you go to a restaurant, you're basically paying a hidden surcharge just for the privilege of eating in 2026.
What's driving food prices specifically?
Two big things. First, extreme weather. Droughts, floods, unpredictable growing seasons. It's all hitting crop yields and supply chains. Second, tariffs. And this is the one nobody wants to talk about.
The Trump tariffs?
Yeah. Right now, Americans are paying an average tariff rate of 18.7% on imports. That's the highest it's been since 1933. We're talking 30% on goods from China, 50% on steel and aluminum, 25% on auto parts. And a blanket, 10% on basically everything else.
And that makes prices go up because
tariffs are taxes on imports. Companies pay more to bring goods into the country and they pass that cost to consumers. It's already showing up. Appliances, furniture, electronics, even coffee and citrus. All up. And businesses are saying this is just the beginning. A lot of them were working through existing inventory. Now that's running out, and the tariff costs are hitting harder.
So tariffs are making inflation worse, not better.
That's what the data suggests. But there's another factor that's even sneakier, and this one affects you even when you don't notice it.
Shrinkflation?
Shrinkflation. Instead of raising prices, companies make the product smaller. Same box, same price, less stuff inside. And here's the thing, it's not captured in inflation statistics the way you'd expect, so the official numbers might say prices are stable,
Do we have examples?
Tons. In the UK, they tracked digestive biscuits shrinking by 28% over the past decade, butter packs down 20%. In the US, it's everything from cereal boxes to paper towel rolls to snack bags. One Walmart shopper told NPR his usual grocery run went from $40 to $60 for the exact same items. And that's not just inflation, that's shrinkflation compounding it.
This hits lower-income people harder, doesn't it?
Way harder. Because when you're already stretched thin, you can't just buy in bulk or switch to premium brands that haven't shrunk yet. You're stuck paying more for less, and the official statistics don't fully reflect that squeeze.
Okay, so we've got food, tariffs, shrinkflation. What about housing? Because rent feels insane right now.
Housing is the biggest piece of the puzzle. Shelter costs make up about 36% of the entire consumer price index. It's the single largest category, and shelter went up 0.4% just in December alone.
Why is housing inflation so sticky?
Two reasons. First, there's a measurement lag. The way the government tracks rent, it takes months for real market changes to show up in the data. So even if rents are cooling in some cities, the official numbers won't reflect that for a while. Second, most people are locked into leases. You don't see rent increases until your lease renews. So even when the market shifts, the pain takes time to spread. Or ease.
Is there any good news on housing?
Actually, yes. Forecasts say housing affordability should improve in 2026. Incomes are expected to outpace inflation, and the typical mortgage payment as a share of income might drop below 30% for the first time since 2022. But that's national averages. If you're in New York or San Francisco, shelter can eat up 40% of your income or more.
All right, let's talk about the Fed. They've been cutting rates, right?
They cut 3 times at the end of 2025, quarter point each time, but now they're pausing. The Fed meeting happening right now, January 27th and 28th, is widely expected to hold rates steady.
Why pause?
Because they're in a tricky spot. Cut rates too fast, and you risk reigniting inflation. Keep them too high for too long, and you could tip the economy into recession. So they're sitting back, watching the data, trying to figure out what those tariffs are going to do to prices in the coming months.
There's also political pressure, right? Trump has been going after the Fed.
There is. And Powell's press conference tomorrow is going to be closely watched, not just for rate guidance, but for any signals about Fed independence. But historically, the Fed has resisted political pressure. Whether that holds remains to be seen.
So bottom line, what should people actually take away from all this?
A few things. 1. Don't let the headlines gaslight you. If things feel expensive, they are. The numbers might say inflation is cooling, but prices are still going up, and the damage from the past few years is permanent. 2. Watch the hidden costs. Shrinkflation, tariffs, service fees. The real inflation you're experiencing is probably higher than 2.7%. And 3. This isn't over. The Fed is still navigating this. Tariffs could get worse. Weather could disrupt food supplies again. 2026 might be better than 2025, but we're not out of the woods.
Not exactly uplifting, but at least it explains why my wallet hurts.
That's the goal. Understanding doesn't fix it, but at least you know you're not imagining things.
If this helped, hit subscribe. We'll keep breaking down what's actually happening, not just the headlines.
Thanks for watching. This is Zeitgeist.